Good morning. Welcome to the SEAF model. I'm Jack Kosar. This is effective for the week of February 9th, 2026. Let's get started. SEAF signals for this week. We retain energy and industrials as they came in the top two spots here. And we pick up healthcare after materials dropped off a bit slightly. Just kind of a unique way that the board kind of landed this particular week in terms of being really straight up and down, almost not perfectly, but straight almost down a line in terms of trading week, tactical month, strategic quarter, really kind of being relatively. You can see it in the heat map a little bit better, but relatively consistent in terms of top scores to bottom scores. Keynote here to mention the reason healthcare got the nod over consumer staples here, even though they both scored 11, is the next sorting mechanism is the trading week. So the newest money gets recognized over the slowest money. In this case, it was pretty tight. So, consumer staples looking relatively positive here with that nice score. And again, industrials choose across the board, score of 6, and energy maintains its top score with 3. Something I wanted to kind of highlight real quick before I head into the heat map here. It's a little bit of a messy chart, but this is the sector ETF Asset Flows as a percentage of like a pie invested. So if you were to take each grouping of the 11 sector spiders and assign it a percentage, this would really dictate like what percentage of that sector is of the overall pie of the market. Right now, this green one up here is technology, kind of taking that big lead. But what I wanted to do, and it's a little hard to see here, but this red line here is energy. This chart goes back to 2020. So the last time we were in these relative lows in terms of the percentage of energy of the S&P 500 was actually back into 2020. And if you've been tracking SEAF model for a while, we had a really good 2021, 2022 in terms of energy. The SEAF model picked up quite a bit of that. We've then kind of peaked here in the end of 2022 and have had a bit of a decline since then. Energy's had little spurts where it's attempted to come back, but overall, smaller and smaller piece of that pie when it comes to the S&P 500. But what you can see here is it's starting to turn up, and that's kind of what we're catching right now. The reason I bring this up is the market in general tends to be a mean reversion tool. You can kind of catch some of these trends where you're not always just going to sustain flat. Obviously, technology took a little bit of a header, or not a header, but went sideways to down here, and then subsequently has risen up. So just interesting to see that we're catching some of this energy trend. History is not going to perfectly project that we're going to have a similar year to 2021 and 2022 in terms of energy. But what it does tell us is that we can get into these cycles, and this turn up is starting to look up similar to a turn up that we saw in the latter parts of 2020. So just kind of keep an eye on that, as energy has been the top sector for a couple of weeks in a row now. Heading into our heat map, as I said, this is one of the more uniform heat maps I have seen since I started building them, in terms of the money being aligned where they want to go. And that really kind of also coincides with the way that the asset flows came in. Trading week, 0.91% in energy. That's a lot. That's a big move for energy in terms of how we're tracking the velocity of money in these different time periods, and really starting to see some really strong accumulation in energy. This is something that in the past we've seen big flows into energy come in on the trading week and then stall out because we weren't getting that accumulation that was starting to turn this tactical month or the strategic quarter dark green. Similar situation for industrials, 0.51% on the trading week, which is huge. 0.4% is kind of what I've deemed to be statistically significant. So 0.5, especially as a number 2, is a pretty big deal. And again, starting to see some accumulation, a little bit less so on the tactical month, but we're starting to get that darker green on the strategic quarter, which means not only is money flowing into these sectors, but it's sticking. Healthcare coming in 0.36 on the trading week. That's a really good number for number 3. Very rarely do we see anything near that for the third on the trading week. So that's what kind of propelled healthcare into that the top three, but consumer staples wasn't far behind, 0.34 on the trading week. Where consumer staples really kind of fell off here is a little bit of weakness here on the strategic quarter. Was able to kind of offset with the fact that it placed fourth here in the trading week. So, I mean, these things really could have flipped either way. Very tight here with consumer staples and healthcare. Materials had a little bit of a drop off, 0.14% in terms on the trading week, which just wasn't enough to kind of keep that sustainment to be in the top three, as well as a little bit lighter on the tactical month strategic quarter. So not as much of that accumulation we'd like to see. Down here, technology, still strong outflows. Now, note that this data is through Thursday of last week, so we did not have Friday. And if you guys were paying attention, Friday had a significant update, 1.9% overall money flowing back into the sector spiders only on Friday. This is after having 3 of 5 down days where we had money coming out and a really strong out day on Thursday of last week. So Friday had money flowing back in. So if I had to guess, technology would not be sitting here at the strong bottom, because I know some money flowed back into technology, but negative 1.98% on the trading week, largely pushed out by software stocks, drastically underperforming. Money really flowing out of the software stocks. Speculation being that AI is going to eat software. It's nothing that's in the SEAF model, but it's just some commentary that I picked up. Heading into our sector total AUM, we did briefly cross into that 21-day moving average. And again, if you're new, this is if you add up 11 sector spiders into one data point, you get this number. So we're sitting up here near that north of $350 billion for the total sector AUM. Nice steady climb. Jumped right back above that 21-day moving average and seeing that corresponding move in the S&P 500 as we kind of were starting to tip over and get under this 21-day. Really using, I don't like to use a single indicator as any kind of metric for the market, but looking at this one, a sustained move under this 21-day moving average is really what we're looking at. We've had a little bit of some little peaks and little wobbles here, but really needing us, in order to see the directional change in the overall S&P 500, we would need to see, money flowing out of here a little bit more aggressively than it has. Otherwise, we've really kind of been status quo here. We've had these little blips under that 21-day moving average, but nothing sustained long enough that really created enough of a move to spook the market. Heading into our rainbow charts, energy is looking really strong. This is as high as it goes, top 3, and it's sustaining that level. Like I said, 0.91% increase on the week. That's a big amount of money flowing in. And what is that turning into? A corresponding big move in the relative outperformance versus SPY. Obviously energy was buried for quite a long time. I brought up, this chart where we're really declining overall in its share of the S&P 500, but this little reversal here is turning up on the relative performance versus SPY, and that's being sustained by some really strong flows through 3 time periods for energy. Industrials is in a similar spot. Took a little bit of a breather here, popped right back up. Nice, strong outperformance versus the S&P 500, going back to really when we hit this upper favorite. Now, obviously, we touched down to neutral briefly, but industrials has remained strong. Nice, strong relative outperformance versus SPY, really breaking through this minor resistance here and kind of taking new highs. Again, really strong numbers, 0.51 on the trading week. Starting to see that accumulation in the strategic quarter as well. And honestly, this is the highest that industrials can be in terms of its score, in terms of its SEAF score due to the dominance of energy. 2s across the board with an overall ranking of 6 is about as high as industrials is allowed to go unless it's able to surpass energy, and energy is kind of taken off right now. So these are 2 really strong places to be that the SEAF model has identified in terms of sector rotation. Healthcare jumped into, we had some nice movement in healthcare going into the 4th quarter and early 1st quarter here of 2026, late 4th quarter of 2025. Spent some time in that favored, got some nice relative outperformance versus SPY. Healthcare, strong week. Like I said, 0.36 on the trading week, a little less accumulation than the other two sectors that we just mentioned, industrials and energy, but overall still sitting in that uptrend. Been a little bit sideways since the beginning of the year. Some sustained flows here into healthcare could get this thing up into push this thing a little bit higher, but overall healthcare looking strong. Nice little turnaround here. If you kind of zoom in on the relative, pointing in the right direction, relative outperformance versus SPY. I wanted to bring up technology. Technology continues to underperform and really has since October of last year, 2025, as we've kind of climbed up from that upper favored area down through neutral into a void. We've been sitting into a void now for a couple of weeks. Really strong outflows last week. Again, I don't have Friday's information at the time of this video, but negative 0.98 outflow in terms of the from coming out of technology, deep avoid 11s across the board, really accumulating some negative outflows for the S&P 500. So technology continues to be a place to avoid for now. And then utilities. I just want to bring up utilities. It was kind of sitting in the middle here. We just kind of climbed out of neutral, so nothing to do yet with utilities, but we seem to have found a relative bottom in its relative underperformance versus SPY, and starting to kind of trend up in the right direction. Would need a lot more asset flows coming into utilities. We're sitting near neutral in the trading week and the tactical month. But we had some outflows coming out that was pushing this thing into void, so we're eking back up into neutral. Just kind of a place to watch. Like I said, as we found a relative bottom versus in this relative performance versus SPY chart here. So again, nothing to do yet, but just interesting pattern on the chart that I wanted to highlight. That is all I have for this week. I look forward to breaking down the SEAF model with you all next week, and thank you.